Good afternoon, all.
Good afternoon.
And now our subject is impact of COVID-19 on insurance industry. Actually, we have all known that Madam has summarized and brief. The observations are already briefed by them, but still, we should have a look on how this COVID-19 has uh, impacted on insurance industry. Actually, uh, we all know this is entirely a new experience to the whole world. So, in order to know this, identify the significance of COVID-19, it should be better. We should look on how the previous infectious disease has affected our globally. You know, this is a third zoonotic coronavirus disease. That means transmitted from animals. And before this pandemic, we have experienced in 2003 SARS, which is severe acute respiratory syndrome. It's transmission from bats, civettes, etc. But actually, it affected only 26 countries. And the infected cases only 8,439 cases. And the fatality rate is only 6.6%. And WHO declared it's an epidemic only. There is no more vaccination till yet. And another one is what we experienced is the Middle East respiratory syndrome that emerged in 2012. Its transmissions from camels. Also, it's affected only 27 countries and resulting into total infected case of 2,519. But the fatality rate is somehow 34.3%. That means it's high. And for that MERS also, there is no vaccination. And we have to analyze in this context how this COVID-19 is entirely different from other coronavirus diseases, SARS and MERS. Actually, this is the first ever widespread coronavirus which WHO declared pandemic on 11th of March. And its spread is over 2013 countries. And the total infected case is already over 26.5 million. Actually, it is seen as an exponential rise in numbers. But the thing is, the overall death rate is only 3.29%. And the number of deaths, 87 lakhs. Yes, so this is the data is on 5th September. The another aspect is the mutation process. Actually, it is a challenge for developing vaccinations. And once more, it's a global phenomenon, but the experience varies from countries. And even in India, it's different in different states. This is the scenario which makes it different from other infectious diseases and which actually becomes a challenging for risk management and for all mitigation process. Everything depends upon how this COVID-19 has affected all over the world. Now we can see actually for like any other crisis, it is the management that defines the impact. How this COVID-19 is managed within different countries. Actually, that gives rise to what is the type of impact in different economy, industry, and everything. We can have a look on how this that spread is the growth of spread from 15th May to 5th September. This is the data. I have taken only typical countries because these countries have a typical experience and the way they have treated is different from the overall how the universe is treated. But first one is it's only a difference how the growth rate between 4 months. The total infected case rises at about 4.8 times within these 4 months. But the thing is, the death rate has fallen significantly. And our experience, India's experience, and Italy's experience, and Singapore and USA, they are typical in the sense we can go through it. In USA, the world over, it is over 55 lakhs already over as on 15th May, but it actually as on 5th September, it becomes 2.64 crores. And the death rate, overall death rate, it is reduced from 6.3 to 3.29 as on September. As far as our USA is concerned, which is the major contributor of infected cases at about 31.1 percentage of the overall infected cases. Its growth rate is number of infected cases, the growth rate is 361 percentage, then about 3.6 times. Why this happened is an important factor to look upon that how this developed. One thing is its population density, and another thing is lack of adherence to social distancing protocol. But how they arrested is the rapid test and splendid ventilator facility. But as Italy is concerned, actually that COVID coincided with their influenza season. That is why it is their experience that the initial stage is high, but they could able to control it within a short span of time, and its increase is only 118%. And the initial reason for spread is gatherings for matches and trade fairs. But for Singapore, we can see it is the model country that we can assess, because the number of infected cases raised from 31,960 to 56948, that is only 178% of increase in number of infected cases from May to September, and the death rate is also very meager, 0.04% only. But for as India is concerned, you see how the infected cases has rise to uh, about 14 lakhs to now it is above 40 lakhs, and the growth rate is infected cases is 2,869%. This is very alarming situation as far as India is concerned. It is in this background how the different countries manages the crisis that defines the impact. The different strategies adopted, especially in India, is social distancing, like education and awareness, lockdown and unlock phases, regulation on transport and conveyance, restrictions on public hospitality events, theaters, train, work from home concept, and adoption of latest one is the micro containment zones. How it is impact affected our societies? It's a drastic behavioral change. It is observed that increased hygiene concerns and the primary concern transformed to food and safety at the initial stage. Also, we can observe that consumerism is very much came down to low level. All festivals and ceremonies and hospitalities, everything is stopped now. Also, its impact on why we are analyzing all this is it's our trade and this activity in economy that defines the development of nation. Now, you see, the long-term impact is there in travel and tourism. Another aspect is our exposure to infectious disease is very much reduced. But at the same time, a general reluctance for medical consultations has occurred. Another one is our that platform is changed from our physical contact to online platforms. Also, as Madam has already specified, the need for health and life insurance product is very much increased. Another one is the reduced production, manufacturing, and trade actually slow down in the economy. Also, that fluctuating share market and low interest rate. All this defines the future of general industry and especially the insurance industry. Now we can come to how it is actually impact the insurance. Actually, we know the Insurance Act in support of other businesses, trade, travel, transportation, energy, manufacturing, hospitality, and it safeguards the people's asset, earnings, liabilities, and property. It is the main role of insurance. So, when all these industries are affected, how can the insurance industry can become an isolated one? Of course, it also will affect, but it is relevant in insurance industries much its severity is less than the direct other industries experience. But the another important aspect is there is an uncertainty in the prediction of emerging COVID scenario because it is a novel experience. There is no past experience and its exposure to infection and fatality. It is very difficult to form consistent models. Why? Because the data is very much insufficient. You are having very insufficient data. And its reliance, reliability, everything depends on how it is collected, where it is collected. Also that parameter estimation for simulation techniques also. It is through we are assessing that parameters. It's also is very difficult. Another aspect is the geographic and demographic evidence is inconsistent. It varies between different countries and different species. This really makes a challenge to predict the future and hence to predict the insurance industry's future. Also, how it affect different between different insurance industries is general insurance, health insurance, life insurance. It varies. Also, it varies between public sector and private insurance sector. A survey reveals that about 51% of CFO believes that there will be a decrease in revenue between 10 to 25%. And also the profit also will be reduced by 31% for the coming year. That is the current 2020. We have seen another evidence that many are losing their employment. So there is, of course, there is a reduction in earnings for individuals. The economic activities are reduced. All this affected the premium paying capacity of individual insurance portfolio. Also, these employer-employee schemes, we know, and usually the renewal time is in April, in the month of April. This COVID really affected the renewals in group schemes. But it seems it is only temporary phenomena because once we that work employment conditions are restarted, we hope it will come back. The major concern is business continuity and customer retention. The business figures in 2019-20, because we know the pandemic started in the month of March. It is a closing of all businesses for all insurance industries. Due to this and sudden that onset of this pandemic, it really affected the closing business figures in the year 2019-20. Also, there is an increased liability for the emerging claims settlements. Maybe it's short term, but we have to wait how these infections spread on. Another thing we have to look into is the market value of assets is reduced. The share market fluctuations and the interest rate fluctuations, we know already the interest rates are at low level. The investment returns also, we cannot see how for an unforeseeable future we cannot define how these investment returns will uh, come retrieve back. This always led to one important aspect, that asset liability mismatch, because the lowering of interest rate, usually the assets are valued at low level, but the liability, because as usually the insurance, especially life insurance, is a long-term contract, the interest factor is very much important. When there is a slight difference in interest, we know the price will increase. So the sometimes the insurance companies face a need for capital infusion just to compensate for asset liability mismatch. Also, the working arrangements shifted to that work from home just to ensure the employee safety. This actually, for a time being, for a short time, it is reduced the man hours and increased the expenses. All these directly contributing to a reduction in operating profit for the year 2021. Also, as far as the distribution channels are concerned, the traditional mode of operandi, that face-to-face negotiation, is no more relevant. That regulatory interventions on claim settlements is happening by ADA, thrust for product innovations, especially for COVID-related products, and the relaxations in late fee on premium. All these directly affected the operating profit and the liquidity. But instead of all this, we can see one important aspect, that the awareness and demand for health insurance and life insurance products among the general public is on the peak now. Now we can move to the impact of on health insurance. Actually, in health insurance industry, the private insurance cover only 18% of the population in urban and 14% in rural. The major concerns are the claim payout and liquidity, the thrust for product development, and the reserve requirements. Why? Because now IRD has already instructed to accept the risk of COVID-19 on active policies. Actually, these policies has not covered this risk of COVID-19 while drafting its premium and cost and everything. This risk factor is not covered. Why? Then what will happen? It will upset the cost benefit ratio. Also, you think if it is in private hospitals, the treatment cost is at high level. Really, it is a risk, a challenging factor for health insurance. But at the same time, we can see one scenario, that the planned surgeries is reduced very much. Also, the percentage of population covered under health insurance is very bigger. So, the exposure of the infected cases to the among the covered list to COVID-19 is low. This actually reduced the net impact in health insurance. But of course, it will change once we return to the normal. So, we can see that if the health insurance industry is not well planned with proper and balanced risk mitigation, risk transfer strategies, the rapid increase in infected cases, actually it is falling to a natural catastrophe. will really trouble the liquidity and capital adequacy. So now IRD has intervened for a new COVID cover policy. We can see that the COVID cover policy is developed by the health insurance industry with lack of that morbidity rates. Nobody knows exactly how these morbidity rates will go up. It is not stable. We can see already in the first line that from May to September, the morbidity rate is very much changed. The trend is very much changed. The Institute of Actuaries has developed two models, HIRD and SCIR models, for forecasting the infection and fatality. The HIRD model, it is how that H means health, I infection, infected case, R recovery, and D death. How the rate of change from one position to another state is assessed. In SCIR model, the only one difference is that quarantine aspect is also taken care. However, these models has developed the based on the data available till now only. But the treatment cost is inconsistent between hospitals and between states. Another one is in this new COVID policy, there is a liberalized cover for health workers. All these facts results into either under or overpricing of the product. Also, the community transmission increases rapidly, and this will of course increase the IBNR claims. Now, another one is this COVID-19 really affects the comorbidities such as diabetes, renal, and other chronic diseases. So, what will happen? There will be an enhanced trial of non-COVID chronic claims for a period beyond COVID. So, our reserves should be enough to match this contingency also. Also, that repricing of existing products is very must. For that, one another important step that health insurance can take is to partner with corporate customers just to forfeit some employee benefits for healthcare activities. This will improve that client stickiness and portfolio retention. Now we can pass on to general insurance. Actually, that insurance and our GDP is correlated very much. That property and casualty insurance protects the GDP. That also the GDP defines the premium paying capacity of individuals and so directly linked to the business of insurance, life insurance industry. It's put actually many internal and external challenges to different type of general insurance industries, that is motor, property, burglary, business interruption insurance, personal accident insurance, marine cargo insurance, and agriculture insurance. We all know that automobile industry is already deep and is further hit by the lockdown. Both the sale and production is already reduced by 11%. Why? This sale and production reduce means it will contribute to the reduction in new insurance premiums and renewals. Why renewals? That distribution fate is already changed now. But another aspect in that motor insurance is that personal accidents claims have come down to less than 5% due to reduced activity. Not only that reduced activity, already reported claims also there is unavailability of surveyors. These together contributed to a short-term profit. But in the long term, the persistence of social distancing and enhanced use of private vehicles, but still less maintenance of vehicles will lead to more accidents and will cause accelerated claims in future also. But at the same time, the purchase of new vehicles increases the premium income also. As far as the business interruption insurance and burglary insurance is concerned, the 30 days non-occupation clause will be disputed, of course. We all know there is no transportation. So, of course, our marine cargo insurance will drop. Overall, India is a country where the agriculture is the main income generating aspect. That if the lockdown prolongs, of course, our agriculture insurance also will suffer. Now, how it is affecting life insurance? For life insurance, we have to analyze between different type of products, different type of schemes. In the conventional field, we have term insurance, long-term insurance savings plan, unit linked insurance, and in group schemes, we have funded schemes, group insurance schemes, and social security schemes. We observe a heavy rush for increased cover in term insurance. Preferably, it is on online. But it is why that term insurance need is already at a high peak level, but the cash position of the individuals and for high sum assured, we know there is an indispensable medical examinations. But nowadays, all are very reluctant to this medical examination. So, though the term insurance that need is very much felt that medical examination and instability in cash. Actually, there's a slump in sales of high sum assured term insurance covers. The most important factor, I think, it is interest rate plummet. We all know the cost on insurance is defined in a cash flow basis. That discounted cash flow, that is the cost we are defining in insurance. If the interest rate is decreased, of course the cost will increase. So, as far as the long-term products are concerned, usually the life insurance is always a long-term product. So the interest will really affect the cost of the long-term insurance product. But there are some products which are having guaranteed return products. That will of course capture market. But we can see all the insurers who are having the guaranteed return policies, they are trying to withdraw it from market because they could not afford it no more. So now we can see a trend in discontinuation of policies through that lapsation and surrender of policies. If death rate is also is increasing, there will be, of course, there is an inadequacy in reserve and there will be liquidity issues. Also, sometimes the insurance companies are under stress for rapid disinvestments, which will, of course, lead to loss. That marketing aspects, like traditional marketing, face-to-face selling by agents and bancassurance is no more relevant. In life insurance, Usually, the consultative sale process is very much iterative and complex. So, simple digital solutions will not suffice the need. That in-person interaction have to be substituted by more powerful digital platform. As far as our unit-linked policies is concerned, we know the share market, the stock market is already under stake now. So the consumer confidence in the stock market is badly hit. The industry needs more thrust on customer education or retention and how the funds can be smoothed in this fluctuating market. Because there is a general trend when the market is coming down in panic, everybody will be withdraw our funds from market. But the SIP type of policies, actually it will smooth our income. But most of the customers are unaware of it. So we have to increase the customer awareness of how to deal with the share market linked products, how to change between fund types, and how to make profit in out of the fluctuating markets. Also, in the general public, they need the liquidity, more liquid position because they need cash for many things. Their general income is reduced, day-to-day earnings is reduced. So there will be automatically there will be a thrust for computation of pension funds. And there is a propensity for, there's a decline propensity for long-term funding in group funded schemes. Also, the employer-employee funded schemes, the renewals is affected because many firms are already shut down. The surveyors also thinking of how to manage other expenses. So their contribution to the employer funded schemes is it will be at least will be held up for some time. As far as our social security portfolio is concerned, there are many claim payouts in this portfolio, but actually this social security is the real need of time also. How all these risk can be mitigated through proactive measures in insurance. In short term, business continuity is the main concern. We have to review and update contingency plans. Also apply that stress test just to ensure the resilience against shocks. Because COVID-19 being frequent than expected now. Another aspect is the employee safety and well-being. For this, that work from home facilities are ensured. There is an urgent need for crisis management task force to install a cross-functional task force to monitor the evolving COVID-19 situation, draft the response plans, and communicate consistently and frequently. The more significant one is we have to frequently communicate with our stakeholders. Who are they? That regulator, the customers, the partners, agents, brokers, shareholders, just to build the confidence and to prove that the situation is under control. For a long term, in a long term perception, the main concern is capital and cash. So, the stochastic stress test all are to be updated. That financial projections using this updated stochastic stress test is very much needed. Also, the cash flows in future and the need of capital reinforcement just to ensure the financial resilience. Also, we know that online platform is very much increasing in not in insurance industry, all service industries. The platform is changed to online platforms. All dealings, all trade, everything changed to online platforms. So the major concern there is the IT infrastructure stability and cyber security. It is a need of time for industries to ensure the required bandwidth for remote access. Also to establish standard cyber security setup because there is a heightened risk of cyber threats and cyber criminals. There is a lot of malicious apps. So imparting the knowledge of cyber security is a is very much attention. There is a very much need for this. Also, whenever there is an incident happen as a threat to cybersecurity, it should be responded at the earliest. Also, the industries have to define which are the critical security functions and ensure its continuity. Also, empaneling a cyber forensic professionals also is the need of time. Another one is the industry is facing many claim experiences. We have to frequently monitor how these claims develop. So the post-claim measures is a very important aspect. Run the simulation techniques for unforeseen risk. Also collaborate with each other for risk database and sharing of information. Now, as a case study, I have gone through how LSC experienced this COVID-19 scenario. It is very wonderful that amidst this COVID-19 stress situation, the 2019-20 business is not so bad. How these achievements they have made is a case study factor for all insurance industries. That is what I am presenting this. And the financial year closing 2019-20, LIC becomes the market leader with market share of 75.9% in first year renewal premium and 68.74% in number of policies. There is a new business growth of 25.17% even this pandemic scenario and highest ever first premium income. Of course, there are group schemes, pension group schemes also crossed 1 lakh crores. There is a growth of 39.46%. Total premium also grown up to 12.42%. Total assets, there is a growth of 2.7%. In parallel with this, total policy payout also done in well. Another one is the digital transactions growth, 36%. This is the important aspect that sustain growth in the coming 2020-21 year also. Why this happened? Its strength is the most trusted brand in Indian insurance. It has an infrastructure of 2048 branches, satellite offices, 4045 Life Plus office, 930 Life offices, and a splendid premium points. And there is a wide network of employees and 12 lakh agents. The transformation to strong digital platform is a strong base for these achievements. That web portal, there is a service portals for customers, employees, agents, and the splendid alternate channels for premium collection, alternate distribution channels, that is micro insurance, direct insurance, bank insurance, and health insurance. And the splendid performance of joint ventures, LSHFR, pension fund, LSC cards, mutual fund, IDB, all these contributed. to the growth of LIC, even in this COVID scenario. What are the proactive steps LIC has taken during this pandemic? It's a case study. It is a good platform for a case study. Mainly, they are customer-centric and community-driven initiatives they have started. Likewise, the relaxations in premium payments and claim settlements. That grace period is extended in this COVID scenario. Also, that claim settlement is a wonderful performance. Why? What they have done is they proactively collected the list of victims of COVID-19 directly from government and settled the claims, searching out for the relatives. So that business continuity, how this organization met with this, it's a special techniques, that is special revival campaign with late fee relaxations. Already LIC is implementing that customer retention programs. It is overall strengthened in this COVID-19 scenario. Also for employees, that efficient work from home arrangements with remote access is provided. The digital platform they utilize very well in the communication process to employees and to agents and to customers. In the beginning, in the month of April itself, LIC has distributed personal protection expenses to employees. Also for agents who are suffering very much from the drop in commission income, the organization started disbursing advances as COVID advances. This is actually a moral support to agents also. Also, there's a minimum business criteria for agents, and that their various club membership that criteria is also related. You see, in this COVID scenario, this industry has recruited many agents on online, and the utilization of digital platform is increased. The survey says that only 26% of premium collected to over cash counter. The Paytm, PhonePe, Google Pay, Amazon, etc. 10% contributed. It's a strong customer portal which contributed to 10% of total premium collection. And merchant collection 28% increased. The most important is the NACH and direct credit contributed about 24%. Another one is the existing mobile apps, My LIC, LIC Customer, LIC Agents app, LIC Pay Direct, LIC Sales app. All these already there, but the awareness of is increased by publicity tools. All this contributed to that premium income increase on the SMS facility. There is a phone number, my LIC Help and Ask LIC, is being used by many customers now. Also, the product features are being presented digitally. These all aspects contributed very much in this COVID scenario to the performance of this organization. So, I request you all to stay safe and thank you.